now that the stage is set for incubators, accelerators, we've already been talking about startups. And Peter, thank you for giving a deep peep on what Hub71 is doing in the same space, leading it towards how digital assets are a major consideration for some of the largest organizations, even governments, regulators, and practically anyone with a single brain cell working, right? So as TDeFi, we work with crypto startups primarily. It's a Web3 incubator and consulting company. But when I was talking to the organizers, I said, I think there's a lot of pitches and a lot of people talking about what they do, but not a lot of people talk about what's happening around generally in the industry. So let me focus around topics that are a major concern and something that the industry truly lacks altogether. Now, a bit about my background, 14 years almost in angel investing, have a tech incubator back in India since that time, operated it around the world. Got into crypto 2015, did practically everything possible, mining, OTC, investing ever since. And then around the crash of 18, 19, and 20, I discovered that a majority of projects in crypto were not that bad, like the good ones. And still they were being branded or tagged or left over as a failed project, despite of their product working amazingly well, was because their token was not doing well. Now they're supposed to, as an entrepreneur, they're supposed to create a product, a business, and a market all together to function, and solve a problem. They're not supposed to deal with sophisticated financial instruments on a day-to-day life. And if the token doesn't work, you really can't blame the founder on that token. So on that function. But guess what? Bringing my experience from the incubator side, I also knew that not every founder or a founding team is well-equipped to function across all the important sides of building a business. So we said, you know what, let's establish more of an incubator advisory model here as well for crypto, focusing more on this, on one side, fintech, intensive fintech, other side, tech, super good tech, cryptography is not easy, and then publicly traded assets, sophisticated finance, instruments, publicly traded markets. So we ended up creating a large ecosystem. Now, before I get into that large ecosystem, I have to understand my audience, as I've learned from my books. How many of you have a token or are actively responsible or related to the performance of a token in the room? Anyone deals with tokens here? I'm certainly in the wrong room. This, I won't be able to see this. Hands up, please. How many people deal with tokens? Oh my God, he has many. Okay. How many have a token of their own, as in their own company? They are in the founding team. Okay. Cool. I'm talking to you guys, mostly. If no one else is available and they're busy with their phones, I'm talking to these 5 people. Cool. So what we ended up doing is creating a large ecosystem. Unlike Hub71, I'll refine my pitch. We are an ecosystem, but we are not just an ecosystem. We are technically an incubator with an infrastructure of execution, which means Steve Jobs started off by saying the consulting without execution is lame. So if you're not executing your advices, you're essentially not doing anything. So we came up with a core infrastructure, which is a group of companies within our group. They help, different things. Recruin is a talent recruitment company. You can find them here. They work with the likes of Binance, CDeFi, Pantera Portfolio, Animoca Portfolio, and so on. TDVC is Rupesh sitting here, average venture funding. BizThon is a hackathon platform where we produce almost 1,000 startups from around India, Canada, used to be Ukraine big time. We're getting back there, and now Poland. TDX Launchpad is a launchpad with 60,000 investors registered and 28,000 KYC investors and so on. MM is market management, and today my focus is around speaking on those topics. So this larger infrastructure is to help partner and supply whatever is required by a startup to succeed. And then there's a portfolio of companies like better referred by Peter. The ecosystem comes to your rescue when you need them, when you're at the right stage. So this larger portfolio of company jumps in to help you grow when you are at that stage and depends on the point of integration. And then there's a larger Web 2 and Web 3 ecosystem that you can see. Today's keynote, like I said, is mostly focused on a topic of tokens as publicly traded assets. This is a byproduct of what we observed being inside the industry during the last 11 months. You know, we saw the digital world explode, the digital asset world explode, and we were right in the epicenter because, I mean, obviously not a lot of them were standing. And one thing that was crazy about us is that 95% plus of our portfolio is living and breathing across the last 11 months, while a couple of them are unicorns. So quickly coming to the topic of the day, and I'll probably end up saving more time for the organizers because I'll finish it fast because I only have 5 people. So we wanted to understand tokens as publicly traded assets. You have created a product, you have got the market, you might have revenues, but your token might still be shit. We have a shit ton of projects like that in crypto. And at the same time, we have projects like, I don't have to tell the name, but you'll know, that have been in the top 5 market cap list. They don't have a product, they never had. They're supposed to have a product since the last 4 years, right? And they're always on top 5. They're like 30 billion to 60 billion market cap more often than not, right? And that's not one. There are many such projects. So this gives us a clear idea, not just a hint, that your publicly traded asset is definitely not the right representation of your product market fit, your adoption, call it whatever you may, your finances, your revenues. Nothing represents the value of your token directly, right? And vice versa. So we're trying to dig in. How did this come? Where did this come from? So ICOs were derived from the word, initial coin offering was derived from the word initial public offerings. Yes, similarities. Both are used to raise funds from public investors. Yes, we do that. But there's a tiny difference. In the former case, when you're an IPO, you're mostly valued at around $1 billion, which means a larger ecosystem, better investors on board, better vetting processes, regulators taking care of most of the stuff. So by the time you're hitting the market, there's a ready infrastructure to handhold. The public market included, they are used to of regulated offerings, and hence, the offerings don't blow up at your face. But in ICOs, public sales is the first thing you do. There's no one to handhold. There's no one to take care of what's about to happen next. So, and I mean, I see a few friends here that are representing exchanges, but in IPO market, when you go to exchange, they have ready partnerships to take care of, let's say, managing your markets, managing your treasuries. There are investment bankers on board, and they are mandatory. So if you don't have all of these check boxes done, you will not be listed. Here, you pay 50,000 and you're listed. That might be your only 50,000 and you still get listed, right? And you're ready to fundraise, and you're ready as a token. So this was a major difference that makes the market tricky. Now, the reason I'm getting there is the fact that it looks super nice to raise money from the public because that's the best value you can get. Remember, the entire VC life cycle of a Web 2 startup or any single startup is meant for those VCs to take exits in the public market. That's called exit liquidity more often than not, right? So truly, the true valuation of your company is better determined by the public. But so if you are able to get that value in your initial days, then obviously you have made a killing, right? VCs will come in, scratch your back, kill your valuation, give you 100 reasons why you should not be valued at whatever exuberant valuations you have. But public won't. Public would just follow the FOMO. Raising from the public is great. The problem is what happens next. You've raised capital. Your token is listed now. You have absolutely no experience or little experience of dealing with a publicly traded asset, the random sentiments that go beyond your control, Donald Trump arrest, market goes down or up, whatever, war, market changes. Your product, your adoption, your revenue has nothing to do with this. But more so, if you have just raised capital, you're supposed to use this capital to work on your product, not to use this capital back into the same market that funded you, right? So essentially, the drop that you see on the other chart is inevitable. It has to happen. But here's a tiny story that I often throw on the table. One of my portfolio company, Vulcan Forged, got an investment from a Wall Street giant recently, about 4 months ago, a $30 million check, Anthony Scaramucci, Skybridge Capital. And I was sitting with Anthony in Davos, and I asked, Anthony, you are first friends to the entire crypto realm, from CZ to Yacht. Everybody's at a message from you. Why did you choose to invest in a company, in a metaverse and a GameFi company that is, not even in the top 5? You could have invested in Sandbox, Decentraland. And he said, he gave me a long thesis, but I'll conclude in 2 lines. He said, I have 40 years experience in the publicly traded markets, and my analysts come from here and there and there, and we invest in charts. So believe it or not, this project had the best charts. You have to go back approximately, 8 minutes from where I started. We were talking about the fact that how different these 2 markets are, how different their liquidity is, the regulators, the amount of capital ready to be deployed on the first day, and yet the giants, the titans of the trading and investing world, they still want to depend on the metrics that is applicable on the IPO market. Which means, and by the way, this presentation will not end in a solution. This will end with a question. So where I'm getting to is, what are you supposed to do? You don't have the exact same market. You don't have the exact same acceptance, exact same liquidity. By large, you're a fraction of that. And people and investors and traders will keep judging you today and tomorrow on the performance of your asset, exactly based on the metrics of the other market. What are you supposed to do? 2 options. You get into fake trading. You start painting your charts, or you leave it to die. Because if you leave it to die, your charts are as immutable as blockchain. Is there anyone who trades full-time here, or even part-time? Anyone trading here? Okay. Just by the show of hands, validate this statement that I've heard from my trader friends. Most of the time, the best traders that I've met in life, they would say, remove everything around the chart. Just give me a chart. Don't even tell me the base pair, and I'll be able to make my trades, successful trades over the chart. Would you say this is the correct statement? I don't know. The traders? No? Okay. No one validates that. So you don't look at the charts. You make investments on the basis of? Indicators is what? In the charts, right? So essentially charts, no? Okay, so we got there from a distance. What else? Not essentially news, no. You wouldn't invest in news if BTC is on 60,000 and the news is bullish, like not crazy bullish, right? Tron, you don't invest on Tron anymore on the news because you have spent your lifetime of savings on the news most of the times. Yeah, news, right? Do you invest when Tron makes an announcement? Yeah, right? So I think most of the conversations eventually land, I can obviously do this all day, but most of the conversation will land up around the fact that people do invest on the basis of indicators, and indicators are plotted on the top of charts. So your charts will be your immutable history, an immutable history of your token, of your publicly traded asset. Again, what are you doing about it? Your liquidity will determine how much investment can you get in the current round, how much can you, because that would decide for the investor how much can they exit, and so on and so forth. So again, the question is out there. What do you do to manage this? Yes, a lot of people come to market making. I'll take a minute to explain what market making is, essentially, because that is how market making is sold in this industry, which is the biggest fraud. Market making essentially means throwing bot orders on both sides of the order book, demand and supply, right? Not essentially always to match those orders, right? To show that the order book is fairly liquid. But as soon as an order on either of the side is hit, you have actually hit the risk profile of the market maker. And the market maker is not supposed to take risk or make a trade on your market. And that's why a lot of time I've seen most of the projects, hundreds of projects, complaining about the tier one market makers. Well, they are not wrong. They are market makers. They are not traders on your market. So if in a bear market, in a bear trend, they are not putting in enough liquidity on your markets, and you're not seeing enough matches, well, they're not responsible because their risk level has been hit. So like, they won't go beyond 0.5 or 0.1% of risk on either of the sides. And hence there is no liquidity, and hence there is no volume on your charts, and then you go on, whining about your market maker, which is wrong. It's your problem. You didn't understand the service. Market making is not a viable service in illiquid markets. So what is that? Obviously, good marketing, getting larger liquidity, organic liquidity, and so on and so forth. Get on better exchanges. But we'll talk about that later. I'll have to finish this in the next 1 or 2 minutes. So what we do, what we help primarily to our startups is right compliance, getting to the right partners so that you can have a whole lot of people working on your token, looking at your project, using them, and so on and so forth. Getting you market advisory, getting you in front of the right marketing companies, PR companies, tech companies, and everything else. Some numbers about us. In the best of days, we've capitalized above $1 billion. 50K plus token holders. This is all, about 6 months old. Our recent incubations are 15 million user companies in a single shot. We are 60 plus projects strong now, and a good 150 plus projects in pipeline. I'll skip this quickly. We have sitting regulators on board, so our help in compliance really, really works out for a lot of people. A bit of peep into our portfolio. Thank you. That's us. Anyone you find in this hoodie would be willing to help you and take the questions that I've left open on the stage. Thank you.